I want to bring in Payne Management, Courtney Dominguez, along with Prudential's Financial Chief Market Strategist, Quincy Crosby. Ladies, thanks for joining us. Quincy, first, I'll ask you about Boeing because investors, from an investment point of view, investors are wondering, Boeing's got a great reputation. They've got an amazing order book. Their earnings per share estimates in the last 3 months have soared 15%. Right. So is it a stock that you keep in your portfolio? Do you start to look to buy it in your portfolio?
Clearly, what happens is if you're going to make an investment decision, you're going to depend on Boeing to go out there and fix this, get this right, do the PR, but also, more importantly, work with all of the airlines, work with the pilot associations. As soon as that filters in, if not before, I think you're going to see investors, long-term investors, go back in. The share price, as you pointed out, Charles, moved up dramatically. Whenever that happens, it sets the stage for a negative headline to just bring it down and down perhaps more. So I think at some point you are going to see investors, long-term investors, go back in and under the assumption that Boeing is going to do what it needs to do to get this fixed.
And I think all of these countries saying you can't fly this plane just adds a greater sense of urgency to this story. Courtney?
Oh, completely. And one thing I think we want to look at with Boeing is this isn't necessarily the first time something like this has happened with them. Just a couple of years ago, they had issues with their Dreamliner, which wasn't nearly as aggressive as what we're seeing right now. But it is something that they came back from. And so I don't see that that's something that may not happen again.
Let's talk about the market today because the Dow would be up probably 150 points or so if it wasn't for Boeing. CPI. No inflation. Wages are soaring. Wages up 3.5%. Inflation up 1.5%. Is this the Goldilocks scenario? How can you argue against this backdrop as far as an investor?
I think for me, Charles, it confirms that Chairman Powell, they made the right decision. You know, they obviously had a policy mistake last year, and they see this data. They've reversed course. This is the confirmation that was the right choice to make. Gives me confidence as an investor that these guys have good leadership and that they're willing to admit they've made a mistake and they fixed it at this point. We're not out of the woods. We still have other issues out there. We got China, Brexit, and a whole host of other things. But this is certainly a great.
But those are sort of headline things, right? This gets to the crux, Quincy, of the economy, the economic backdrop, and perhaps even a longer-term vision for investors.
Well, absolutely it does. In addition to the factors that you mentioned in that report, we also saw rental, which, by the way, the rental equivalent is about 33% of the core, and that's come down. That's people's rents starting to stabilize, which gives them more disposable income. However, the one thing, we had the National Federation of Independent Business survey come out today. It moved higher, which is good news. However, embedded in there is wages moving higher, and that hurts the small business owner. At some point, if the economy continues to slow, continues to moderate, I think labor costs, as indicated in that CPI, by the way, is going to moderate, and that will be helpful, maybe not so much for Main Street, but we're talking about Wall Street.
Right. Of course, we did also see ADP's report that that small group of 1 to 19 employees, they actually had a decline in workers. Again, they can't compete with the wages and other goodies being offered by the big boys. But with this economic backdrop, though, what do you think of this market, and then perhaps that we are poised maybe to retest the old highs?
I have to agree with that. I think we're continuing to see really good data come out on the economy. We have unemployment really low, which you mentioned. Inflation being low is just justifying the fact that the Fed won't have to increase interest rates. I think people are really nervous. They're thinking that just because the markets are now hitting almost the longest bull market in history, that means they're going to end. But markets don't just die of old age. And if we keep seeing good data come out, I don't see any reason we can't continue to see this bull market go forward.
Let's talk leadership then, because the momentum names are back. All right?
Yeah,
we talked about this last week. You can see it happening.
It was trickling up. Yeah.
Right. And sometimes people call them tech, but it's not just tech. Apple's in the tech part. Amazon's in the consumer discretionary part. Communication services. You got Netflix. You've got Google, Alphabet, and of course they all look really good. Are those going to be the names that then, if we do retest these old highs, that take us there, David?
I hope not. I actually hope it's everybody, kind of lifting together. I don't want to focus on just the FANGs, because when just the FANGs are performing, it tells me that the economy isn't that healthy because you're turning to secular growth. I want to see all those names. I want to see the industrials doing well, consumer discretionary. And yes, tech is a big part of it. Estimate revisions are important, and that's where it is.
Quincy?
Yeah, no, absolutely. I mean, that's one of the things we looked at when the market came off of the Christmas Eve lows, that the breadth, all the sectors moving higher. And then as we got to 2,800 on the S&P 500, pulling back. But what was interesting yesterday was to watch those semiconductor names that had been beaten down, move higher. Perhaps on the back of sniffing out a deal with the U.S. and China. And that the economy is picking up because that's chips and data in everything.
Right.
In everything, in
Right.
autos and games.
So that's your proxy then?
Almost, yeah, because that was the one, if you remember, that let us down back last year as the economy started to undergo a shift, as the portfolios and as the Fed continued to be on pace for 4 rate hikes and perhaps 2 this year. So suddenly we see a turnaround in those. And
you think there's going to be 2 hikes this year from the Fed?
I think there may.
I think the chances of that are zero.
I agree with you. I'm saying they said that in December.
Back then, that was the assessment back then.
Right now.
So
then I read that wrong.
When the market dropped lower. Courtney, technology, you okay with that, or do you like it where we had, one point last week, 470 up to 500 S&P names higher for the year? You want to see it broaden out?
I completely agree. I think having a more broad-based rally really shows the strength of the economy here. And I think most investors tend to be over-invested in tech right now because it has been the name of the game for 10 years. But that can be to an investor's detriment. We look at this recency bias and we're saying, oh, well, it's been the best for 10 years. I want to have my money there. As a good investor, spread it out elsewhere. There's probably going to be better areas in the market right now that aren't so expensive.
There's certainly a lot of value in a lot of other places. I will note, though, folks, that all the S&P sectors are higher today except for industrials, which is weighed down by Boeing. Courtney, Quincy, David, thank you all very much.